Hello, and welcome to JRBT's Tax Talks. I am Angela Ragan, a shareholder in the tax department. I have with me today one of the tax managers whom I will let introduce himself.
Hello, I'm Roger Passini, and I'm a tax manager at JRBT.
Great, let's get started. Most of our listeners and viewers today have probably heard about the Advanced Child Tax Credit, either via the news or social media. Today, our goal is to help you become better informed about the Advanced Child Tax Credit. I believe the best place to start would be to first answer the question, what is the child tax credit? So the child tax credit is a tax benefit for each qualifying dependent of the taxpayer, and it decreases the taxpayer's tax liability on a dollar for dollar basis. Now, the recent legislation increased the maximum annual credit. For the 2020 tax year, the credit was $2,000 per child under the age of 17. But for 2021, the child tax credit has increased to $3,600 for children younger than 6, and then $3,000 per child for children between the ages of 6 to 17. Now, if you have a qualifying child, you still may not qualify for the child tax credit. If your modified adjusted gross income is above a certain amount, then you will be limited to the amount of credit that is reported on your tax return. While we won't go into detail about how the phase out calculations work, you should have a conversation with your tax advisor if you see that your adjusted gross income may be above these phase out limits. Now, the first phase out limit, when I say the first phase out limit, this refers to that increase in the child tax credit that happened from 2020 to 2021. That's that additional $1,000 or $1,600 amount that you will receive as a credit in 2021. This first phase out limit starts at $150,000 if you're filing a merit filing joint return, or $75,000 if you're a single tax filer. And then the second phase out limit, this is the original child tax credit that was there last year, that $2,000 amount. That phase out limit starts if your adjusted gross income, modified adjusted gross income, is above 400,000 if you file a merit filing joint return, or 200,000 if you're filing as a single taxpayer or any other filing status.
All right, that covers the child tax credit. Now we're going to discuss what is the advanced child tax credit. Well, these are the early payments from the IRS for up to 50% of the estimated amount of the child tax credit that you may properly claim on your 2021 tax return. If the IRS has processed your 2020 tax return or your 2019 tax return, these monthly payments started in July and will continue through December of 2021. The monthly payments are in the amount of $300 for children under 6 and $250 for other qualifying children, and will occur on the 15th of each month. Now, how will this affect your 2021 tax return? The total amount of the advanced child tax credit payments that you receive during 2021 is based on the IRS estimate of your 2021 child tax credit. If your total is greater than the child tax credit amount that you are allowed to claim on your 2021 tax return, you may have to repay the excess amount when you file.
So, Roger, a lot of people want to know if this is income or if this will have to be paid back in 2022.
So fortunately, this is not treated as taxable income, but unfortunately, it may be required to be paid back if you received more of the credit than you are qualified for. Some taxpayers may qualify for repayment protection and therefore will not be required to repay some or all of the excess amount, thankfully. If your modified adjusted gross income is below the threshold based on your filing status, then you will not be required to pay back any excess advanced child tax credit received. If you do not qualify for repayment protection, you will need to report the entire excess amount on your 2021 tax return as an additional income tax. This additional amount due will reduce the amount of your tax refund or increase your total tax due for 2021.
So I think a lot of individuals or taxpayers need to understand the significance of this advanced child tax credit. It is something that typically would show up on your tax return when you file during the next tax filing season. So a lot of them may want to know if they should opt out of the advanced child tax credit. So if they don't want the child tax credit, I think the question to answer is, what do they do? And I would say, if you do not wish to receive the advanced child tax credit, then know that there is an option to unenroll through the child tax credit update portal. This is located on the IRS website. You should unenroll if you expect the amount of the tax you owe to be greater than your expected refund when you file your 2021 tax return. Because remember, the payments you're receiving are in advance. They are not something in addition to what you otherwise would receive when you file your normal tax return. So because these credits are paid in advance, every dollar you receive will reduce the amount of child tax credit you will claim on your 2021 tax return. This means that by accepting the advanced child tax credit payments now, the amount of refund that you get next year will be smaller, or the amount of tax you're required to pay next year will be higher. So what should they do? Or what do you think they need to know, Roger, if they want to unenroll from this advanced tax credit program?
To opt out, you will need to create an account through the IRS by going to that tax credit update portal. To do so, you're going to need to have some personal information handy, because you will have to confirm much of your personal information. Some things they may ask for: credit card information, mortgage information, student loan information, home equity loan information, or other car loan information, which these are generally things that are not easy for others to access.
Right, that's a good point. So after they do that, they need to know that if you are filing a married filing joint tax return, then you and your spouse will both need to create an account to unenroll. So you will need to, as a taxpayer, you will need to have this personal account numbers ready for you when you create an account, but then your spouse would need to have personal account numbers of those items in their name when they create their separate account. If you do not both unenroll, then you will receive half of the 50% advanced tax credit for the spouse that didn't unenroll. This is a lot of information for taxpayers to keep up with. What do you think they need to do to be prepared for the 2021 filing season?
Fortunately, in January, the IRS is going to be sending you a form letter called Letter 6419, which will inform you of the total amount of child tax credits that you've received for the 2021 tax year. Keep this letter for your tax records and supply it to your tax professional.
That's great advice, Roger. I also want to give some advice for those out there. Be aware of scams. The IRS will not text you or email you and ask for financial information. The financial information that you need to give will only be when you select to enroll or set up the account through the irs.gov. The IRS themselves will not initiate a contact with you via text or phone call or an email asking for financial information. So be aware of those scams that are out there to get your confidential information through this advanced child tax credit program. So that's all we have for today. I hope that you feel informed and you're ready and prepared to have this conversation with your tax preparer. If you do not have a tax preparer, feel free to contact Roger or myself or anybody at JRBT, and we can better answer these questions for you. Have a good day.